When SpaceX happened this week, it became obvious. SpaceX and Bitcoin are basically, to me, the same thing. SpaceX is a futuristic...
They're both going to the moon.
Well, they're both based on a belief that people have in the future. They're not about anything fundamental right now. Strategy has brought people's attention. They're looking at the way STRC is trading, and it's down to everybody has a viewpoint on it. I'm going to keep saying the same thing. It is very difficult for Bitcoin to be traveling higher if all the money is going into stuff that is based on earnings. And we're running into the second quarter. I believe the second quarter will be more of a disappointment for earnings than the first quarter. Not that it won't grow, but now the expectations are so high.
22% earnings growth.
Exactly. So if the stock market is unchanged from now until September, well, that's a better environment for Bitcoin than one where AI continues to go at 50% a month or 50% a quarter.
For months now, Bitcoin investors have been waiting for the next big move. The problem is that the market doesn't seem interested in giving them one. Despite bullish headlines, growing institutional adoption, and continued excitement around digital assets, Bitcoin remains trapped in a frustrating range. It isn't collapsing, but it isn't breaking out either. And according to macro investor Jordi Visser, there is a very specific reason for that. Visser believes we're entering a period where the biggest driver of capital flows isn't crypto at all, it's artificial intelligence. While many investors continue searching for the catalyst that will send Bitcoin soaring, Wall Street's attention remains fixed on companies producing explosive earnings growth from the artificial intelligence revolution. As long as that continues, Bitcoin may struggle to attract the momentum and retail enthusiasm that have historically powered its biggest rallies. But that's only part of the story. The other side of the equation is the macro environment. A potentially very different Federal Reserve under Kevin Warsh, changing views on inflation measurement, falling energy prices despite geopolitical tensions, and growing evidence that economic productivity could be entering a new phase, are all creating conditions that may eventually reshape how capital gets allocated across markets. If Jordi Visser is right, the next major move in Bitcoin won't be determined by crypto-specific news. It will depend on what happens with inflation, earnings expectations, artificial intelligence stocks, and the broader economy. And perhaps most importantly, it will depend on when investors finally begin rotating away from what's working today and start positioning for what comes next. In this interview, Jordi Visser explains why he believes Bitcoin remains stuck in a bear market, what a Kevin Warsh Federal Reserve could mean for markets, why inflation may be much lower than many people think, and the specific conditions that must be met before Bitcoin can finally break out of its current trading range. But before we jump in, make sure to like this video, subscribe to the channel, and turn on post notifications so you never miss any of our future market updates. Buy $10,000 of Bitcoin on a regular exchange. It grows to $60,000. That $50,000 profit? You could owe $10,000 or more in capital gains tax. Now do the same trade inside a Roth IRA with iTrustCapital. That growth? Tax-free. You keep the full $50,000. Same crypto. Completely different outcome. iTrustCapital lets you hold crypto in a self-directed IRA, trade 24/7, and secure your assets with institutional-grade custody. You can also hold gold, silver, and stake certain assets. Real U.S. customer support. $100 bonus when you fund through the link below. In crypto, structure beats timing. Every time.
I think what we learned is he's going to be very different than Jerome Powell, and he has said that. He has very different views. I think the reaction by the media was just like the oil doomers and just like every other issue that has popped up. Tariffs are going to take down the country. Oh, he was hawkish. He wasn't hawkish. It's ridiculous. 10-year rates have been stuck in a range now since 2022. And in this weekend, I'm going to highlight to people, the only reason rates went higher over the course of since 2021 is because the Fed raised rates. Yes.
It's funny how that works.
Yeah. But that's it. Like everyone who's worried about the debt, everyone is worried they're going to go higher. Every time it ticks higher for a week, then everyone comes out and says the world's going to end. Then it ticks right back down. Two things that happen. Number one, he's a believer in productivity. He announced task forces. Now, my kind of thought on the task forces, he believes, which I do as well, and I think a lot of younger people, non-academic, and I consider myself non-academic because of how much I hated school, but I understand macroeconomics extremely well. I think the Fed has been in the habit since 2009 of micromanaging everything, every word, every speech. It's ridiculous. At the end of the day, they do very little unless they have to come in and save something. That's it. Like, they're not moving rates much at all. They're going to cut 25. Nope, now they're going to raise 25. Who cares? It's not going to change anything. It's a function where the market gets overly dramatic with it. So the task force to me is, are we looking at this the right way? And I have said repeatedly, GDP by itself is a horrible measure of an AI world. But let's use inflation. He has been very outspoken that he thinks the way we think of inflation and goes through it is wrong. He did not change, and he won't change, the target inflation rate. And the reason is because we're kind of trapped into that. If he came out and said, I don't actually think the 2% means anything, we're going to go back to something else. But what he did say with inflation and what he said publicly is, I think the trimmed mean is a much better measure. And I completely agree. I believe in getting rid of these things that are way on the bottom, way on the top, and just kind of sticking with where the bulk of things are, using the median, and every single part of the median and trimmed mean, it's been getting in a tighter range, meaning most things are kind of in this point of like 3%. And the extremes with oil and with all this stuff, it blew out. I think one of the most important things that's happened in the last month is, as the news got worse on the Strait of Hormuz, oil prices continued to move lower. We've seen no ships go through, yet the urea price in New Orleans has collapsed back to lower than it was, meaning fertilizer. Somehow or another, the world had the most important thing shut down and nothing changed. How is oil ever going to sustain an up move at this point if it didn't just do it now? Now, maybe that'll change over the summer as we hit rock bottom, but I learned with prices, that's a warning sign. And the reason that matters is 1-year inflation swaps, which are the only thing that has led the rise up in 2022 from the Fed. It led the entire time. Said, okay, inflation's going higher. It collapsed over the course of the last 2 weeks. So all the crap I gave to Truflation, even though we did get above 4% and they broke away from their CPI kind of guide, it stayed near what the median did and what the mean did. And now we have a Fed chair that's trying to create a task force to agree that, okay, we shouldn't be watching this thing. I think that means actually at the end of the day, when they focus on inflation, that they're going to realize that it's actually lower than what we thought it would be. And if it couldn't go higher with that, how is it actually going to go higher when you strip out memory prices and you strip out all these one-off things?
Investors' argument ultimately comes down to one key idea. Markets may be focusing on the wrong signals. While financial media continues to obsess over every Fed comment, every move in Treasury yields, and every inflation headline, he believes the bigger story is that structural inflation pressures may already be fading. Despite major geopolitical tensions and repeated warnings about energy shortages, oil prices have struggled to sustain rallies, inflation expectations have rolled over, and productivity improvements driven by technology continue to emerge. If inflation proves less threatening than many expect, the market could eventually become much more comfortable with lower rates and easier financial conditions than current narratives suggest. But even if that happens, it doesn't automatically mean Bitcoin immediately benefits. According to Visser, the real challenge facing crypto right now is competition for capital. Investors have limited money to deploy, and at the moment, much of that money continues flowing into AI-related opportunities that are generating powerful earnings growth and attracting enormous attention. That creates a difficult backdrop for Bitcoin, which historically performs best when momentum, speculation, and future-oriented narratives dominate investor psychology. And that's exactly why Visser believes understanding the relationship between AI, earnings expectations, and capital flows is critical for predicting Bitcoin's next major move.
What's your take as to what's going on with Bitcoin?
First of all, it's in a bear market. I'm going to say it every single day until it's not in a bear market. When we break above the 200-day moving average, it will change. Until that happens, it is a bear market. Every single time it runs into any moving average, the most recent one was the 20 moving average, it falls back down. You mentioned the money going into AI. When SpaceX happened this week and it became obvious, SpaceX and Bitcoin are basically to me the same thing. Like SpaceX is a futuristic.
They're both going to the moon.
Well, they're both based on a belief that people have in the future. Yeah. They're not about anything fundamental right now. Like it's very hard to make an argument as to the fundamentals behind this. I love when people send me things and they're going, "You're wrong. SpaceX is overvalued." I'm like, no, when something doesn't have a valuation, it can't be overvalued or undervalued. It has no valuation. It's a complete guess. We're talking about flying to Mars. We're talking about flying to the moon and building space stations. Like this is a dream. So Bitcoin has no energy because it is a vehicle meant for two things. One is for people to hide their money from the government, but that is always going to be a small portion of it because the wealthiest people on the planet, which is where it draws its money from, aren't hiding their money from anyone at this point because they're not taking it. On the other side is the energy that comes from retail and the energy that comes from momentum. It has no momentum right now. Every week there's more people. Now you've got strategy has brought people's attention. They're looking at the way STRC is trading and it's down to everybody has a viewpoint on it. I'm going to keep saying the same thing. It is very difficult for Bitcoin to be traveling higher if all the money is going into stuff that is based on earnings. Mm-hmm. And we're running into the second quarter. I believe the second quarter will be more of a disappointment for earnings than the first quarter. Not that it won't grow, but now the expectations are so high.
22% earnings.
Exactly. So if the stock market is unchanged from now until September, well, that's a better environment for Bitcoin than one where AI continues to go at 50% a month or 50% a quarter. Because if it keeps doing that, I do believe, like you said 6 weeks ago, you're talking to people in Korea. It's like they used to be a big player in Bitcoin, not there. Retail will migrate to what's working. And right now, Bitcoin is in a bear market. We need to see it change. And I'm going to emphasize this point again and again. Never believe you're smarter than the market, ever. The market knows. I had a day on Friday in my own, or Thursday on my own portfolio. I finished up on the day. I have 20 stocks that I own, including Bitcoin. 18 of the 20 were down. 2 were up. Those 2, Marvell and Entegris, they made up for everything of the other ones. But silver was down, Bitcoin was down, Eli Lilly was down. All of these things that we've talked about over the time, they were all down. When I'm hoping Bitcoin and these other things are working, it's when there's a pause in all of the AI stuff, but we're not there yet.
Whether investors agree with Jordi Visser's Bitcoin outlook or not, his broader message is difficult to ignore. Markets don't move simply because people want them to. Capital flows toward whatever is generating the strongest combination of growth, excitement, and confidence. Right now, Visser believes that destination remains artificial intelligence. From his perspective, Bitcoin isn't suffering from a lack of adoption or a lack of long-term potential. Instead, it's competing against one of the most powerful investment themes in decades. As long as AI-related companies continue exceeding expectations and attracting fresh capital, Bitcoin may struggle to regain the momentum that fueled previous bull market phases. However, Visser also points to a scenario that could eventually change everything. If earnings growth begins to disappoint, if artificial intelligence enthusiasm cools, or if the broader stock market enters a period of consolidation, investors may begin searching for the next opportunity. That rotation of capital could create the exact environment Bitcoin needs to break out of its current range and reclaim leadership among risk assets. Until then, Visser's advice is straightforward. Respect what the market is telling you. Don't fight trends. Don't assume you're smarter than price action. Watch where capital is flowing, pay attention to the macro environment, and recognize that patience is often one of the most valuable tools an investor can have. The coming months could determine whether Bitcoin remains stuck in neutral or finally begins the next phase of its cycle. If you enjoyed this video, be sure to leave a like, subscribe to the channel. Thanks for watching, and we'll see you in the next video.